Traders, welcome back to another lesson. So let's talk about avoiding the mid-range. So when it comes to avoiding the mid-range, it goes back to why do I always remind all of you, if the market is consolidating, if it's not doing a wide range, if let's say it's on 100 pips range, let's say price goes like that, point A to point B, everything's clear, you can trade the range. All right, if you try to catch the extreme, or maybe if you missed out the turning point, you're still able to catch somewhere there on a second, or sort of a secondary wave. But if the market is on a tight range, or if it's just on an irregular kind of price movement, there's no clear resistance, there's no clear support, if you try to get involved into that kind of condition, you're very likely to lose money. And that's why majority of traders, when market is trending, they make a lot of money. When market is reversing hard, they make a lot of money. But the moment when the conditions start messing up a little bit, they give back all the profits back. All right, that's normally what happened to new trader. So I'll give all of you one example. So if let's say market is on the range like that, we have clear resistance at 107.47, we got clear support at 106.72. This is a balanced market, hence it's very easy to trade. All you have to do is just buy somewhere near the low of the range, have your stop loss covering the low or using that one as your guidance, then you aim to exit at the high. Same thing, sell at the high, cover at the low, buy at the low, cover at the high. It's very easy. But what's tough is when I start covering every single thing candle by candle, that's when traders start to mess up a little bit. I'll give you an example. All right, so let's say if we look at euro dollar like that. All right, so a lot of traders, what they do is they just keep trying to trade in between the range. Why? It's not because they are stupid, it's not because they don't know how to trade, it's simply just they fail to identify the market condition. Because if I put on the replay mode, right, what makes a trader impatient is when they keep thinking that the market is going to be clear all the time. You are not going to see a clear market 24/7. All right, even for myself, sometimes there are times where I just don't know what the market is doing and I choose to take a step back, and that's one of my job as a trader. I'm being paid so much to not just spot the high quality setup, and also to prevent myself from getting into the ugly situation. All right, so I give an example. So when people start seeing things like that, because they don't have a system in place, if I put on the replay bar again, guess what? They ignore that the market is ranging, or they fail to identify, they just keep trading a BNR. All right, if it has ever happened to you, it's normal, because you fail to identify what's the problem. All right, but the key thing is, no one knows market is going to range until price has formed maybe one or two touches at the high or at the low. So just like this one, no one knows it's going to range. Guess what? You try to go short here on a continuation, targeting the low, but you forget that the overall trend is still bullish. Price is rejecting a clear support at 109.05. Then, yeah, you just take a loss, unnecessary loss. Price goes back up. When price goes back up, what happened? You thought, hey, maybe price is retesting the OMSS, and you try to go short one more time, thought that it is on a downtrend. You again fail to identify that market is just ranging. Guess what? You eventually, let's assume you take a loss. And after you take loss once or twice, it's still okay. The problem is you don't take a step back and really assess that is the market simply just bouncing back and forth off the highs and the low. What I normally do is, if let's say I draw a zone here, it failed, market did not respect this area, and I draw a zone here and market again did not respect this area, something must be wrong with the context, which is the market condition. That's normally when I'll just remove every single thing and I start looking things from a much better sort of hawk eye view. We got a high here and we got a potential high there, and here's our support. That's it. That's normally when I'll start ignoring the mid-range chop. I want to focus on key level. So price rejected high, confirming that is again at a range, and guess what? And this time you can try to re-short it back at high and cover it at the low. I don't want to use this example again. It's a little bit hindsight because I already know that euro dollar is turning out ranging whatever. But what I'm trying to say here is just don't, you see, eventually drop. But what I'm trying to say here is just when you realize that you're taking 1 to 2 losses and things are still looking a little bit odd, a little bit weird, take a step back. You don't push too hard when the market is not doing anything. One of the problems where traders face is they push too hard when the market is exactly just doing nothing, essentially just doing nothing. All right, I'll give all of you some example. Let's hope that we have some example here as well. Let's say on, let's see, it could be as simple as this area here. All right, market goes lower, clear downtrend, clear bear flag, continuation. Maybe you don't know, that's why you take a bear flag here, sort of a BNR here. You fail to capture the high of the flag, then now you look for a break and retest under the flag. It's fine, the setup is actually okay, it's not too bad, because overall trend is bearish. You're just trying to chase the low. And guess what? Market did not give you what you wanted, you get stopped out. And you keep the zone there, you remain the zone there without understanding that, hey, the market is already going back and forth in the zone. So when market does that, what does it try to tell you? It is not going anywhere. All right, but again, most traders, they just just leave the zone on the chart. I'm not sure why. Actually, a lot of you does this as well. When you feel like market is already not respecting a level, it is considered a minor level, therefore just remove it. Same thing, price go back and forth, and guess what? You start overthinking and you start taking random trade. That's normally when you get stopped out, you don't know the market is going to chop. Then what happened is you saw, oh, price seems like it's forming a TPF. Let me go short again. Yeah, let me go short, and then targeting the low. Not sure if it hits TP or not. Yeah, eventually it didn't, right? Assuming you get stopped out here. Then after that, you add one more zone of confusion for yourself, and now you start really overthinking. Say, hey, price respect this area, bounce off here, did a TPF there. Okay, what should I do? And then you say, hey, maybe not that time, this time, or you try to go short again. It's like an never-ending cycle. All right. You don't know when to pull a handbrake. You don't know when market is ranging, when market is chopping. You just keep pushing hard. All right. It is important again for you as a trader to know when the market has already invalidates a zone or as an SNR level that you plot on your chart. Remove it. Especially when you see price goes like that, back and forth, pierce to the level, just remove it because it's showing insignificant. It's just telling you the insignificance of the level. There's no point for you to leave the zone on the chart because it's going to cloud your analysis. It's going to make you just being biased into one direction. Alright, so the purpose of this lesson is to tell all of you what do I mean by avoiding mid-range chart or avoiding tight range or consolidation. It's all about assessing whether or not if you should still continue pushing hard on a specific condition, that particular condition. If market is on a wide range, very simple. You just short at the high, buy at the low, you'll make money, right? Cover at the low, cover at the high. But what if market again today is on something like this, on a messy range, where with sort of just no respect on high to low, or what if the market is on a tight range for about 30 pips? Does it make sense for you to still trade it? You just need to assess it and think whether if it fits into your trading system or not, whether if it does make logical sense or not. Yeah. So that's it for the lesson, and I'll talk to you later. Bye-bye.